Merry Christmas to all of the MMTs. The date, 12/23/14, is coming to an end, and we did quite well. Now we start on a brand new year, and I have to say that the bull is here. The problem is, as I've always said, when he is here, he gets overbought. And on a weekly level, it's at a closing level of 1282. That's up there at an all-time high. So one of the things that we really want to be forthright in is what the weekly chart looks like on the S&P 500. And here, I will do a new group of trend lines, and I will also tell you up front the very, very, very good news that is for you and whatnot. I'm going to put the trend tool up here. I just want to blow this up really quick before I look at this. Yes, that is a 10-week simple moving average trailing away or going higher above the 20-week. And moving averages, as far as momentum goes, we teach people what the formulas are, what they mean relative to price, and any moving averages, minute period, daily, weekly, it doesn't matter. But it does tell you one thing, how strong or weak and why it's going to trade the way it is. So we're closing out up here with St. Nick. Santa Claus rally, light, extreme volume, showing the S&P 500 here has that momentum of going into a calendar year. And I did this last year. Yes, I did. I have showed you what the chart looks like. Now, this is the open, the high, low, and close. When did this start on the S&P 500? It started, and these are the formulas that we have for all our traders, but this is where the market maker application is from. And we're just going to go back to this certain date. I will let everybody know up front what the columns mean. And I am calling for a market top. And I'm very good at what I do. And I have them on the website to prove it from last year in January. Go back, type it in the search signal. This starts on January 3rd of 1950 on the S&P. We don't need those back dividends calculated because it's really where we've made some upgrades right here on 1/3 of 1962. Well, that's 12 years later. Open, high, low, close, and volume. What I am going to say is that we are going to have in 2015 some price action volatility in equities and stocks. I will be happy to tell you that this is charting platform. This is their December 14th is one that was upgraded last week, but it really doesn't matter. When that was minus 33 in green, it was time to get long on the S&P, and that was very short term. We will be updating all of these things. This is the on balance volume that was done on the S&P 500 of recent. So I just would like to say one thing. We get into the performances mathematically now. This is all extremely mathematical. It is color-coded where the psychology of the participant is going to react. You can also refer to it as psychology to the players that are actually in the market. I just want you to know that we closed out at exactly 2082. This is a daily chart of it. The other application is an options chart and performance chart. These are the actual movements. When this got extremely green, when we were down here, it was time to buy. What did it mean? It only meant that a transaction to the upside was going to be made to the current closing today is 2082. And so basically these numbers under the performance, and this goes all the way out here, and We took what normally is orange like that right here. In the real world, it would be green. But we made it orange, dark orange, or red even, and it gives the individual, the new market maker and or the trader, the permission to buy it. And it's going to be accurately right there. So when we start getting over in the S&P, we have many variable factors. We have a 3-day high. I'm just going to show it. A 3-day high. So here was the highs before we broke out. That was at 2060. Then we got up here of the last, at that calendar time. But we had already been up here to 1279 back on December 5th. Yes, we were. And it was an open, it was a high, it was a low, and it was a closing bell on the S&P. So let's just say that we want to look up, and as you're learning how to do this, of course this is in our stock market application that Charting Platform owns. All of it's built into Charting Platform. One of the things that I would like to be very specific is if you want to take let's say a 12 daily low and a 14 daily high, you can. 14 daily low again with the 21 daily high. And these were the math that we got in there too. So if we were to go back, and this is what it was doing where we hit 2079 in the formula. This was that line of code right here. Math doesn't lie. Basically, please sign up now for the free 5-day trial that you can take. Introducing at time levels, like I know what the 28-day level high was. It's right here, and it didn't change. And here's the 28-day low. That's 2001 right there. Okay? That was the low. Now, on the 35 daily high, which is 7 trading days, by the way, 2030, 2032, 20002, that was the buy, and that was the close on the S&P. And all of these factors of knowing where the prices are do not lie. They are that well. We go out as far as we need to go out. But we know, here, 126 daily low was 1,820 then. And we can find out what it all means. We do not have to even look at a chart. We know how many days. This is 1,260 trading days. That's not weekends either. Now, another thing that's very sophisticated is that within this overall S&P movement, we use variable price ranges in different various time frames. So, it's very good to know that when you do put in a low, you're not breaking that low. That was a 21 daily low. So you know that that's strong support. And you know where the highs were. They don't change unless you make another high. And whatnot. You were 1946, 31. This is where this rally started from, off of that December pullback. And the math doesn't lie. Now, when we get over here, we're going to look at something totally different. And what's it going to be? It's going to be so that you understand that the range is 17 points total round trip in the daily range on the S&P. Look at this one. On December 9th, you had a 2 daily range on the S&P, 41 handles, 41 points. 45 over here on the 3-day. And, you know, that number will stay like that, but that was a big movement. And basically, you can go out, check it out. I'll show you again. You can start with the daily range. These are the actual movements in the S&P, and it doesn't lie. And this one goes out, if you want to know where the prices were, and you want to know where these ranges were, hey, from the lows where these are calculated, the 84 daily range is still 248 to the good. Yeah, And then this is a score right over here, the color codes and different things. It's going to give you a score between the long, the bull, and the bear both. The actual score between the bear and the bull. And not only that, current high to current low. Here is what we called over here. Let me go back. This is called the 14-day percent day range. That's what these numbers are right here. And they go out here to 1,260 days. It's a different indicator that is proprietary but very accurate to the process of the buy and the sell. Because you're going to get over here current high to low. And you're going to know that longer term, these markets still remain extremely overbought. It would not be red. Red is green. So for all of these years in the rally, this is all green. But in the real world, at the charting platform world, is they teach you the other side of the psychologies. So this is a wonderful thing in 2015. Volume weighted average percent range. This right here, so you know, is the ratios that are over here. These are the ratios. And they come from our market maker platform. This is the black box that charting platform has in there. They don't lie on the dates. Of course they don't. And these are the actual ranges that either negative 1.29 equaled a certain dollar amount. It could have been $10. Who knows? These ranges that we're in right now, I'm just looking at them. And these color codes are saying, you know, back on January 12th, we were going to get a pop. And I'll tell you why. Normally, in the world of trading or technical analysis, I wouldn't care. The math doesn't lie. This would have been flaming red. Psychologically, the green part is where you buy it. And you can look at the first day. It's when you get into these negative brackets, you start getting these great buys on the S&P. But, and we'll spend more time about this at a different date. Here's the 2 daily high and low that we did on the S&P 500. And when we really want to know where the truth is, there's some things that we can show. The daily percent change is the actual delta formula that equals the price. So that's being upgraded. But the truth is right in here. So when we want to know a 2-day high to low, we always want to know at a glance of what those factors were. The math is on the S&P 500, okay? And the math doesn't lie. So there are ways to read it that we can't do in this session. But it will give you a current low score right here. A higher high or higher lows. Yes, no, 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 no. It will tell you. It does a lot of things. It will talk to you. These over here on this on the charting platform, you start with 2 days, 3 days, and you go through the ratio of where the actual price is either got strong support, medium, going to break through a key area of resistance and or key areas of support level. Here is the lower low score. That is a psychology that tells you to take the opposite way. And another thing that we just wanted to tell people about was the following. Charting platform, the 9-day, and remember, these trading days have a certain color. They mean something negative or positive. And what you have here is a 5-day up and down, a 10-day up and down, a 20-day up and down, and a 50-day up and down. And these ratios equal the price of, in this case, it's going to be the S&P. And then when we start taking, it goes out right here up and down. This is the ratio. So the higher it is, the stronger it is. The lower it is, the weaker that it is, and it's time to get net short on something like that. So that was on the S&P. I just wanted our new market makers because this is a Christmas special, and I can say this to you. That charting platform has a mathematical equation where traders and buyers and sellers are going to make a transaction. I mean, it's wonderful. And it's actually like on the on-balance volume right here. Listen, the way that this works, I can tell you the best time to have ever bought a call option or a put option. And it's based on what? On-balance volume that has a mathematical sequence, and it will tell you the entry and the exit both. When they're dark orange, that means we're going to go down. And on the 14th of November, we were 2015, 2023, 2014-42 was a low, and we closed it on the S&P at 2023. Now, let me just share this with you. This is this line of code right here. And that's on, I'm just going to use that one on November 5th. Because look at what happened when it was time to go long. The bigger the value that these numbers get, that was negative with the brackets. These are positive. So what a turnaround here in that S&P. And that's how accurate it is. And these are the deltas and the betas that are used. Charting platform did a very good job of having the on-balance volume. I will bet you any amount of money it was time to get short. This is on the 18th of November. On a 10-day total, it had progressed from being overbought to getting extremely overbought in the longer time frame. So, like I said, if you're going to go from this orange color to this darker orange, everybody is in the market there, and it's time to get net short. And what it does psychologically, it gives you permission to do it, and when it works, your confidence in that permission is at extremely high levels, because for once you found something that could really serve you in what you need. We all need some stuff. But listen, these are the performances on the S&P. And when they get big brackets like they did down here on 77, it meant that there was going to be a turn. And it was. I mean, under a 5-day, it was minus 73 from the last pullback. And let's review the 12th. Listen, 23, 2032, and guess what? 2002. And what did that mean? That accumulated that total score where, especially here on the 5-day, it's normally what this would be extremely red and negative in volume, and you wouldn't want to get in the trade. But here, it's done this way, and it's telling you, hey, it's time to buy. And so you do it. And so basically, these are the performance days where the S&P moved on it. We had a 34-day, we had a 23 and a 24. That was right behind it there. And when we go out a certain amount of days, it's finally telling us one thing, that yes, the S&P is overbought. And yes, under the 200, when you start getting into 50, even, well, 20 is really good for the lower end of that math ratio. The top math ratio is they're going to have different figures, and based on 200-day performance, this was about, at that time, with that time frame, they were all in. They were. And it dropped down on them a little bit, but 200 days is the longest period in the bracket. So when you're making that transaction, you know it's already overbought, because you start working with here, it was oversold. And it was time to go long in the negative bracket. And we did. That pullback stopped. And all of the math right here, and every angle of the math relative to price, none of these different components lie at all. Let me just show you something. I wanted to show you something very key specific. So just give me 1 minute. On the daily ranges, you're going to know what the call option and the put option on the S&P 500 index is. Okay? And I'm calling for a major top to start once we get through the holidays. This is your daily format of a chart of what people look at. And basically, it's converted by Charting Platform, who owns it, into the Market Maker app, and how you're going to get your entries and your exits and everything. So we're at an all-time high here. Yeah, we had a 1, a 2, a 3, a 4. So this is where it started. This is where it started. This particular pullback is absent in December. People are on the sideline. They have not been involved in this bull market. They are going to come back in 2015. But we're going to have a big reversal first, meaning that I am calling again. The highs are going to get put in and it's going to roll over. This correction, we're going to just blow this part up. We called the top and we got paid on the put options. And at that time, that high was on 12.5, just like I looked at it in the Charting Platform Excel. And guess what? 2079 was a high, and the close was 2075. Well, we were already closing up there. Look at this narrow. These are 2 days holiday. These last 3 days is the 6th day. First day, third day, 5 day, as to what this math will be. So yes, in January, as we start the year, like we do every year for 30 years, is that we have a mathematical yearly formula for the S&P based on the 12-month, both the up days and the down days, divided by 240 days. And then, listen, give yourself a break. Get signed up so that you can actually go through the movements and have a lot of fun. You can't lose anything. You can only gain the world.